Hello traders, Gary Wagner here, just about 10 o'clock in Honolulu, 4 o'clock in New York on Monday, April the 4th, 2016. And this is Trending Markets. We do have the Standard & Poor's 500 along with the Dow Jones Industrial Average down today. Dow Jones Industrial Average trading off about 65 points on the day. 17,727. Now, in terms of the Standard & Poor's, that is also trading lower today, currently trading at 2056, puts it off about 9 points on the day. The high 71, 2071, and the low 2054 on the day. So traders, no doubt, we are under a little bit of pressure today in U.S. equities as a whole. 2058.50 is our current print in the market. You can see this on our daily chart, still well above our 200-day moving average. We are still above our 23% retracement point at 2043. We haven't had lows that have even threatened or gone into that area. Now, we do have stops rather loose at about 2020. And what I think we need to do at this point is to trail our stops up and trail them higher to below 2043, which of course is at 23% retracement point. Now, we did get a breach into that area on Friday. We had the jobs report that came out. That, of course, gave us some extreme volatility in the market. But the jobs report has basically shown us that the economy is growing. It's not growing as fast as anyone had hoped or anticipated, but we are seeing some growth in the economy. And therefore, I do believe that overall we're going to see U.S. equities track higher. Now, today is simply, I believe, in light of that, a consolidation day. I would look for higher pricing throughout this week, as I said, but by moving our stop to even below 2040, right below this 23% retracement, at least protects a little bit more of our equity. Now, the other thing that I want to look at is going to be a daily chart, but this is a daily chart in Japanese average format. I've just gone ahead and pulled it up, and here's what we're looking at. Let's go ahead and kind of widen these candles a little bit. There we go. But what I'm looking at in the case of the E-mini in regards to this particular chart is the fact it is a down day. But when you create a Japanese average chart, a Henkinashi chart, you're taking the midpoint to the midpoint of the prior trading cycle or trading day on a daily chart, of course, but you're taking the midpoint to the prior day and inserting that as your open. So we have not only traded above the midpoint throughout the day, we have never gone below the midpoint at any time during the day. And that's what is significant about not having these lower wicks in the market. That's why during an uptrend, you want to see an absence of lower wicks. There's no doubt about it. So we are trading higher on the day. When we look at the Japanese average charts, we have a green candle. Even though we're off 7 points on the day at 2058, you can see that the Henkin average kind of gives you your current fix in a little bit of a different way. But no doubt we're trading at 2058. Traders, I am recommending that we move our stops up to below 2040 on a protective stop. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.